Welcome back, everybody. Sive is here with the Forex Peace Army.com. Today's usual two topics. First is a brief announcement on our weekly report that we have just prepared. Second is preparing the trading plan for the beginning of the next week. So speaking about our weekly report, everybody knows that investors' minds mostly were busy with their sporadic activity of the Donald Trump on the geopolitical arena. The Davos meeting, a lot of statements, imposing sanctions, canceling sanctions, invasion in Greenland, not invasion in Greenland, and so on. But on the back of all this noise, economy keep working, and we're getting some important data. We're getting some information, and in particular, it relates to the Japan. So Japan currently stands in focus, and I call you to keep a close eye on it, because as we mentioned a few months ago, that Japan might become, or at least be among among the major risk factors for a global crisis. So a global crisis could start in Japan because the insurance companies and the banks, domestic banks in Japan, have a very small safety margin for capital. Debt is really very high. Rates now is going out of the control. Any rhetoric doesn't help. So even Scott Bessent already starting to become worrying because actually, guys, we have now on the 10-year bonds a very small difference. On the Japan, and 3.5%. On the United States, 4.5, 4.9. So it's very, very small, and it really brings a really big risk. So the intervention has been made recently also hasn't helped. So keep an eye on the Japan. It's very important, and especially if you trade on the Bitcoin. Bitcoin currently it's very related to Japan yields, because this is indicator of the carry trade. As more expensive borrowing become in the Japan, as less desire of the investors to put them in assets that has high volatility and no interest, which is actually the Bitcoin and other cryptocurrencies. So that's becoming a hot topic. Also, we have considered a few other important issues in relation to the Europe, in relation to the United States. So just you could read report. Now let's turn to our trading plan for the next week. Mostly all the things that we have discussed have been confirmed. So in the beginning of the last week, of this week, in the beginning of this week, we start suggesting that here's might be not occasional action. So we immediately said that probably this ABC pattern will not be completed. We have early reversal inside of the weekly triangle, which suggests the breakout, and right now we've got this breakout officially. So you can see what has happened on the weekly chart. Market is not at overbought on the weekly, by the way. It just stands near the top. We do not have any significant resistance levels here, and the weekly trend has turned bullish. So this clear weekly bullish context. On the daily chart, as a result, and currently officially we already could say that this ABCD pattern is erased, because markets, take a look, move above this top, which was the C point, and it's officially erased. The pace of the action is really great, and we could set a few upside targets. So speaking in a big scale, it will be the butterfly with the 2040 target, but this is still a long way to go. It's mostly, well, the task for 1-2 weeks, maybe even longer. Just because, take a look here, market is overbought. Obviously not the best point for considering taking new longs. We would like to get something like this. So we need to get some deep, some pullback to consider taking a long position. So how deep this retracement should be? What actually the distance of this retracement will be acceptable? On the 4 time frame chart, if you take a careful look, you will see that not only our CLP minor target that we discussed around 118 area has been completed, but market has accelerated directly to the 1618 extension with 1830. I suspect that this is because of the stops been placed here and just some acceleration, maybe some other reason in general sentiment. So with this upper direction, we have also local target, the same ABCD pattern that we have, which is the OP right here, and stands 1860. So taking all stuff together, we do not want to see really big retracement because we do not have any big barriers, we do not have big resistance, we do not have any big targets. The only barrier is overbought. So from that standpoint of view, by the way, guys, it seems that here is also grabber. I haven't checked it, but it seems when trade started, we also have got the grabber. Anyway, with this combination where market stands near the target and the overbought is only the barrier for our prediction, I do not want to see any deep retracement. So I do not want to see the market will erase this most recent upward thrust. This will be a bit contradictory to the overall sentiment on the market. Correspondingly, a retracement that we would like to get should be somewhere inside of this swing. That's the major conclusion that we intend to use. It would be absolutely nice if market will show retracement first and action to the OP second, because as I said, it will trigger not really big retracement, and second, market will still keep gravitating to the OP target, which is really great. So it means that on the hourly chart, I would consider two levels. First is 1793 and second 1770. 1770 is also, by the way, let's take a look, is a kind of the hand shoulders that we discussed previously. For the position taken was discussed yesterday. So, so it's something like neckline or something like this in the retesting of these previous stops. Because drop below the 1730, which is next confluence, as I said, will raise the most recent upward performance, which is not really great. We just need some pullback out of the overbought condition. That's what we'll be watching for. And second minor pattern that might be formed here, it might be the part of the retracement. It's some kind of the small intraday bread and butter buy. That's my start either from the 1790 or from the 1780, 50% of the whole thrust action. Yes, we do not have a lot of candles here, just 7, which John Napoli tells about the 8, but maybe on Monday we will get another one, so it might be. Just keep an eye on it if you trade on intraday charts. It might be interesting momentum trade here. For instance, we will get ABCD down, so that might be particular ABC performance. So first retracement here, bread body starts, we're getting BC leg, bread body completed, and we're getting some downside continuation in the shape of the ABCD pattern, getting the triple to buy, and so on. So all the stuff that we usually use. Nothing new actually here. So, well, probably that's all. Let's see what the performance we get on Monday, and I hope that everything will be great. At least appearing of this pattern, potentially, it's really great achievement. It's just because with this pattern, especially with this 1618 target, we could get the direction for a few weeks. We will know that we should trade to the upside, so market goes to a particular targets. And that makes our business significantly easier than trying to catch something in a wobbly market, right? So that's enough for me. See you next time on Tuesday, and let's see what will happen.